Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for Thursday, and this is the 14th of January, 2021 after 6 p.m. Central Time. Remember that on Monday, it's Martin Luther King Day. The markets are not open. Cash markets are closed. You check it with your banks and so on, but it's a national holiday. And the trading is electronic only, and well, it is anyways in most markets, as you know, but it has abbreviated trading session. Many of the markets will be closed by noon Central Time, so you might want to check with your broker. If you're on my mailing list as a client of mine, I'll have everything in my news report tonight so that you know what the hours are going to be. In a few minutes, we're going to see let me say that. I said that wrong. It's not Vice President. It's President-elect Biden going to talk about the first phase of a relief package that he's coming up with. My understanding is he wants about $1.9 to $2 trillion. It will include ideas on $1,400 to most Americans. Remember, there was an original plan for $2,000, so this would make up the difference. $15 minimum wage, and a host of other things that he'll be mentioning. I understand that this is part one of a several-part plan. On the next plan that'll come out, he'll be talking about infrastructure relief, climate change, and the like. This is also going to be when he takes office. This will be the very first plan that goes to Congress, and it's going to be a test for him. Can he get this done, and how well does it get received by Congress, which now the Democrats control? So that's something to think about. The market's thinking about it. And the market today, if you're watching bonds and notes, they were down pretty good today. Not a dramatic decline, but down good. Why? People are wondering, how are we going to pay for all this? That's logical. At the same time, that same news is friendly on the energy sector because, hey, here's another spending to get things back to normal. A negative for the markets is France is moving now countrywide with a 6 p.m. curfew to try to stem this tide of COVID-19. There's still plenty of problems out there, and I have friends that are getting their shots in a couple of states, and they've gotten them. I can't get my shot in Illinois. We're just never right here with anything that the city and or state tries to get done. I hate to say it, but it's true. In the metal markets, just meandering back and forth, but copper stays with the bid as platinum and palladium are looking good too. So for the week so far, it is Thursday, the week's coming to an end. We're in a decline on a weekly basis, on a close, down 0.7%, not very much. So we've just backed off from those highs, but not very much to talk about. You can almost see that the market's forming a wedge here. There and coming up this way. It's going to have to decide what it does with this. This is a holding pattern. That's what I like to refer to it as. It's when the market starts going sideways. It's not a bearish pattern. It often resolves to the upside, so it's something that I watch. What is the swing line doing? And remember what the swing line is. The swing line looks at the current day and the day right prior to it. And the way I wrote a formula for it, it draws a line intraday as this is all going on to tell you, is the market in an uptrend or a downtrend, depending on if you believe in my theory that an uptrend is defined as higher highs, higher lows, a downtrend, lower highs, lower lows, and no trend has in some manner a higher high, lower low, or the lower low first and then a higher high, but not a stepping ladder. Well, you're in an uptrend, and it would take 37.68, breaking that on the current pattern to break that. If you look at where the 18-day average is, it's not yet over the last swing line low, which means if the market wanted to go back to what I call the line in the sand, you would break that uptrend, but not necessarily be in a downtrend. And if you look at where the resistance was earlier, it was here and that. Then the market backed away. Right through here. This began on Tuesday. It's the first time in about 3-4 days the market hadn't hit the Bollinger Band, and it doesn't have to hit it all the time. In fact, it's rare that it does. And it's just started backing off and getting into that trading pattern. Last, you have a market that has an embedded reading, and it just keeps drifting with it. So I think the pros are buyers in the market until they lose that embedded reading. If the red line closes under, let's say 79, just to give you an example, I think that'll bring the market back to a challenge of the 18-day average of closes. It often does. Is it a bear signal? No, it's a loss of upside momentum if it happens, which has not occurred yet. In the NASDAQ, you have a pattern of higher lows, higher highs, but you're stuck right in these black bands. Those are the band tops of the Bollinger Band, top and bottom. Why are they so important? Because statistically, 95% of the time, the market's going to trade within Bollinger Bands. Now, more times than not, you'll be trending up or down, and you'll hit the band and back away. But when you start going sideways in the band, that's where you need your psychiatrist. I call it the psychiatry event. Because you're trying to break out, you don't do it. You keep wondering what's going on. You've got to be more of an in and out trader with that rather than trying to hold on to the position. In the Dow, we still have the embedded reading. So until it's lost, I contend the traders, the pros, are buying on the break. There's a moving average I think they use. I discussed that in my morning ETF and future subscriber videos. So I show them, show you what it is, and you can decide for yourself if it has merit. I believe it does. And I think that's what they're looking at right now. And if you get the red line under 80, let's say under 79 on a close, it is under 80. But I've been modifying that for traders that are trying to judge what to do if it's 79.88 on a closing basis. So that's why I'm saying that. I probably should stick with under 80 and just leave it in the subscriber video where I do that a little better. Narrowing in. I'm still bullish. No change. Resistance, 31,276. The Russell, as I said, you pulled. Now, this is the Gorilla Glue trade, so I want to backstep here. Every day you're hitting, and when that occurs, that you're hitting that upper Bollinger Band, eventually it pulls the momentum of the slow stochastic and causes it to embed. Better strength is seen when the market first embeds and then pulls the price with it. But this is power. This is, don't mess with this, in my opinion. Until you lose the embedded reading, I say the breaks in the market are looking to be bought, and they've all been very shallow. There's another event that's been happening. Notice how the market keeps making each day a high that is higher than the prior day. You only didn't do that back here. This was the first one that you didn't do it on, and that was at the beginning of the week. Prior to that, you had the higher highs each time, and then you kept doing that. So it'll be interesting to see if the market continues that pattern. Just something that I noticed in the market. VIX, remember what we just talked about, that sideways action where it drives you to your psychiatrist? This is it. Can you imagine the bulls? I got it. The market's broken out. Within 24 hours, you give up the whole peak each time. That's part of not breaking out of that sideways action. These are good attempts, don't get me wrong. And if one were short in those, it's a heart attack time. But at the end of the day, it really didn't go anywhere. And that tells you that traders are still not reaching for insurance. In the T-bond market, this decline today, I think it was all part of the speech that's going to be happening tonight as President-elect Biden talks. What is it going to mean for the markets? There was some fear that, as we saw today, Fed Chair Powell speak on a virtual conference as to what he was saying. But when asked, are interest rates ready to go up? And his answer was clear. It is not time. What can I tell you? And as for worries about inflation, they'd love to see it. They haven't been able to get up to 2% in a decade, right? So I think they're going to let things run hot, and I wouldn't worry about the Fed overnight doing anything. And he made it very clear. They will telegraph what they're going to do when they're ready to do something. And he telegraphed today. They're not ready to do a darn thing. So the market itself is saying, okay, you're throwing all this money worldwide at these markets. They're going to come back because we got to look beyond the COVID and say the things are going to get normal, and there's monstrous pent-up demand to do everything. I'm in that camp. In the 10-year note, Trend is down. Lower highs, lower lows. What can you say? It's just sort of hanging here, but it's oversold. The market certainly snapped back from being under the lower Bollinger Band. Dollar index, we've already discussed in some of the other events, but it's sideways action. You don't want to take out the number 89.89. That'll just keep you in this sideways, go up to the Bollinger Band, go down to the Bollinger Band. Maybe a trader's delight in that. Same thing in the eurocurrency. The eurocurrency hit the Bollinger Band these couple of days here, in fact, each day, and it's going to push itself any which way in an oversold condition, but it is a downtrend. To break the downtrend, you have to get through 122.39.5. That would take you out of the downtrend, and any close over that would be an interesting number as well. British pound, the market playing back and forth here. I don't see anything of great measure, a lower low and a higher high. I would just let that be. Bitcoin, higher lows, higher highs. I thought this market was going to try to get to that 18-day average. Even if it does now, it's just a sign of immense strength. Look at how the market held up, if you will. Brent versus WTI crude, look at this crash back from 372. Remember I started pointing to you that something's going on here? Wow, did it ever. The market is coming in, and it is just staying bullish in all the energies, as I've pointed out over the past couple of days to you. Until you lose the embedded reading, these breaks are buying opportunities. The question is it breaking enough to get you in? Last, the nat gas coming back to the 260 level. We'll see if it can do anything. The trend is up unless you take out 256.10. You were overbought. You're correcting as you're dropping that momentum down. Keep in the back of your mind that I want to put in your hand my written research, and I want you to take a look at my morning videos, my subscriber videos. Now, many of you are subscribers to my research, but there's a great number of you that aren't. Maybe it's time I give you a 10-day look at it if you're not a current subscriber. That will apply to old subscribers too. You can come back and take a look at it for 10 days and say, okay, I know that if I throw enough darts at the wall, I'll get a lot of subscriptions, and that's just how it works. So I'd like you to try that. You'll see my written updates. You're going to see that I no longer do an audio commentary. I used to call on the phone, put out a recording, and it would call people. The videos are just so much better, easier to do. And remember, the trial will come with our mobile sets where you can listen to things I do. You get a push notification once you activate it. I haven't been sending out texts. Texts cost you money, so I use a push notification. All you got to do is download our app, and it is free to you. And each time I put out the update, it comes out on your phone, hit it, and boom, you're either reading my report or you're instantly looking at my video. Can it be easier? Website, just go to free offers. You'll see things there. Call my brokers. They'll take care of you. I'm Ira Epstein. Have a good day. This free offer is going to end starting next week. You take care.